Welcome back to the XRP Insider Network, the channel built to track what institutions are actually deploying long before the public narrative catches up. If you're here for real infrastructure signals, not influencer hype or recycled talking points, you're exactly where you need to be. Now, let's address what most people think happened this week. Another DTCC mention. Another wave of tokenization headlines. Another massive dollar figure pushed across social media for clicks. And for most observers, that's where the analysis stopped. But that surface-level story completely misses what's really changing. Because while attention was locked onto big numbers, a much deeper shift has been unfolding quietly. A fundamental redesign of how settlement itself is being rebuilt. This isn't about slapping tokens onto assets for marketing optics. It's about rebuilding the core plumbing of global finance. And the XRP ledger isn't sitting on the sidelines of that transition. It's being positioned as a functional settlement layer institutions can actually operate on. Now, I know the skepticism. You've heard the tokenization narrative before. BlackRock, JP Morgan, endless pilot programs, plenty of announcements, very little real execution. Here's the part most people fail to understand. Tokenization without settlement infrastructure is meaningless. Issuing assets is easy. Moving value at scale, compliantly, and with finality, that's the hard part. The real leverage isn't in who tokenizes first. It's in who controls the rails that value moves across. And that's where Ripple's quieter, unreported moves start to matter, a lot. Because behind the scenes, Ripple has been methodically embedding itself inside the institutional settlement stack. This isn't speculation. This is documented integration. While retail was focused on price action, filings, and infrastructure updates told a very different story. DTCC member developments, back-end settlement frameworks, and at the same time, Hidden Road, now operating as Ripple Prime, positioning itself directly inside core fixed income clearing systems. These aren't partnerships for headlines. They're relationships designed for settlement. So here's what we are breaking down today. First, why the DTCC's tokenization timeline quietly shifted from conceptual to operational, and why that matters far more than hype cycles. Second, how Ripple gained exposure to the US Treasury settlement layer without triggering mainstream attention. Third, how the XRP ledger is evolving beyond payments into native, on-chain financial primitives institutions actually require. And finally, how all of this connects once institutional money begins moving on-chain at scale. Let's start with the DTCC. Most people talk about it like it's some abstract body planning for a distant future. That couldn't be more wrong. The DTCC is the central nervous system of US capital markets. Equities, bonds, treasuries. Virtually everything settles through its infrastructure. We are talking about over $11 trillion in transactions every single day. So when leadership inside DTCC's Digital Assets Division confirms regulatory clearance and a live rollout framework, that isn't PR. That's structural change. But here's the detail almost everyone overlooks. The DTCC isn't rushing this. They're rolling out in phases. Limited asset classes, controlled environments, precise compliance guardrails. Exactly what you'd expect from an institution that cannot afford failure. And the blockchains involved during this early phase? Those become the standards institutions build around. This has nothing to do with social media popularity. It's about compliance, settlement finality, legacy system integration, and regulatory trust. Which brings us to Hidden Road. When Ripple committed over $1 billion to acquire Prime Brokerage, many people misunderstood the move. Some called it overpriced. Others assumed it was about expanding institutional payments. That completely misses the strategy. Hidden Road wasn't just a broker. It became a direct participant in DTCC fixed income clearing, including government securities. That means Ripple Prime now sits inside the settlement infrastructure used for US Treasuries. Not adjacent, not partnered, integrated. And that matters because treasuries are the backbone of institutional finance. Collateral, margin, liquidity buffers, regulatory capital. If blockchain-based settlement touches treasuries, it touches everything. Ripple didn't buy Hidden Road to chase retail volume. They bought access to where institutional settlement actually happens. So when tokenized treasuries and fixed income products move toward on-chain settlement, Ripple Prime is already positioned at the core. That's not disruption. That's insertion. Now layer that with what's happening on the XRP ledger itself. Tokenized assets don't matter if all the financial logic stays off-chain. Real efficiency only happens when lending, collateralization, and yield mechanics are native to the ledger. That's why XRPL's advancement toward native lending functionality is such a critical development. For the first time, loans can be enforced directly at the protocol level, not through external DoFi wrappers, not through centralized intermediaries, but natively. From an institutional standpoint, that's essential. Banks don't want fragmented DoFi experiments. They want standardized, audited, protocol-level primitives they can build on safely. This opens the door to structured products, collateralized lending, and treasury strategies that run fully on-chain, with settlement, custody, and yield unified in a single environment. And this isn't hypothetical. We are already seeing real-world deployment. A government-backed real estate tokenization running live, a regulated bond issuance distributing XRP-based incentives, are tokenized real-world assets on XRPL growing year over year. This isn't speculation. It's infrastructure in use. Now zoom out. DTCC tokenization. Treasury settlement access. Native on-chain financial primitives. Regulatory clarity across key jurisdictions. These aren't isolated events. They're components of a unified institutional framework being assembled quietly, in real time. While others build parallel systems from the outside, Ripple is upgrading existing financial infrastructure from within. That's a far easier sell to conservative institutions. And this is why price lags infrastructure. Markets don't price systems until volume moves through them. We are early in deployment, not adoption. But once these rails activate at scale, even small percentages of institutional settlement volume will dwarf anything crypto has seen before. That's the real signal. Not hype. Not timelines. Not social media narratives. Infrastructure first. Volume second. Price last. So here's the takeaway. Tokenization is accelerating. Settlement infrastructure matters more than issuance. And the XRP ledger is far more embedded in institutional buildouts than most people realize. If you're watching candles, you'll miss it. If you're watching infrastructure, you won't. That's the signal. If this helped you see what's forming beneath the headlines, let me know what you want to break down next. Settlement mechanics, regulatory shifts, or institutional competition across chains. Drop it in the comments. Share this with someone who still thinks crypto is just speculation. And I'll see you in the next XRP Insider Network update.